surprises here with regard to what we have on Editor's Cut today. I have the pleasure of having Vishy right alongside to try and break this down, try and give more perspective, more color on all that's coming out from the commentary. Of course, trying to allay concerns, Vishy, with regard to a whole host of factors, but we'll try to focus in on 3-4 key factors that one needs to look out for in terms of the commentary. Let me first start off with what he suggested, or what Sashidhar Jagdishan, who is the CEO MD at HDFC Bank, suggested with regard to communication gaps, because that has been the key criticism that's come out, Vishy. And, you know, with regard to this communication gap acknowledgement, is it a step in the right direction in your view?
So, a few things that he said, which was that first, be patient with us. Q3 is not indicative of what the future is holding. The bank management is also focused on continuing with profitable growth, and that's going to be the focus. EPS over loan growth always. What is interesting here is the acknowledgement itself, because you know, we have been saying it here in this very studio that the bank's management is not driving the right kind of narrative as far as HDFC Bank's results is concerned, as far as the kind of outlook on the numbers are concerned. So now you have the CEO coming and saying that, listen, I get it. Our narratives were not so great. We will try and fix everything, and we are being humble in accepting that there's an issue with the way story was built versus what played out. I want the viewers to have a look at what exactly the CEO of the bank said while he was talking directly to investors.
Our narratives could have been better, and I take it upon myself that it's a learning for me. With all humility, I do reckon, and we will be focused. As I said, we'll have our single-minded focus is to create a very sustainable franchise, and our focus is going to be on profitable growth. And that's the only metric that I'm going to be looking at for years to come, and especially during the period of transition. We will not disappoint you, that I can assure you that.
Right. Vishy, you feel comfortable with the fact that he's acknowledged the mistake, and probably there's going to be repair work on the anvil, especially with regard to more clearer guidance coming from them?
The only way to repair this is to have a better Q4. I mean, honestly, there's just nothing else that anybody expects from the management than to deliver on the results, on numbers, on business metrics, because at the end of the day, what else does matter, right? But having said that, this was like a 1-hour-long conversation between Goldman Sachs and the HDFC Bank CEO. Yes. And the one point that he kept saying is that the metric I'm looking for is EPS. I want to ensure that our earnings are strong, and thereby EPS is looking strong, because that was one of those points that was brought up during the results, that you had an EPS dip for the first time in a decade, you know, on a year-on-year basis. That was something that's unexpected out of HDFC Bank. So management's clearly saying that's our core focus. We will ensure that those numbers are remaining strong.
And that is the correct way to look at it, right, Vishy? Now, the other metric which he spoke about was deposit growth. This has obviously bothered the street in a big way, because if deposits don't grow, just for perspective, if deposits don't grow well, then it will impact loan growth, and therefore will impact profitability and the like, right? Let's firstly, Vishy, let's go across, listen to what Shashi had to say with regard to deposits.
We realize that effectively we have preponed the loan growth, so I need to now have that period of, I would say, what do you call it, transition time, to warm up the engine, to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities, so that I can have a reasonable amount of share moving up, and so that matching with that of the loan market share. Obviously, it's not going to happen overnight. It's a kind of a glide path that we will be seeing. In the meantime, obviously, you know, whatever I raise, if I raise a lot more, then I'll have enough to maintain reserves. I'll have enough to pay off the bond maturities or the loan maturities that will come up there, and the balance we'll deploy it. If I have constraints because of the monetary policies or monetary situation, liquidity situation in the system being rather tight, to that extent, it will be much lower. But yet, just by repayment of the high-cost borrowings, you will see the trajectory of profitable growth continuing.
Now, very interesting thoughts coming through Vishy. He's not spoken about his reduced guidance on branch count, but he seems quite comfortable with regard to deposit positioning, going forward at least.
So he did make a point about branches later on during this 1 hour long conversation, but the point that he was trying to make is that, it is core to our business to grow our branches, and eventually you will start seeing some of the operating leverage kick in, and that will sort of explain to the market why exactly they're going after branches. Having said that, on the granular deposit base, I want to make it a point. So he's saying the first priority on raising these granular deposits is to pay off your high-cost deposits or high-cost borrowings that came from HDFC Limited. Once you pay it off, you ensure that your reserves are strong enough, and then you deploy. So loan growth is clearly taking a backseat. I mean, even with the EPS comment, he said that I'm going to prioritize EPS over loan growth. So there, it's very clear that the bank is not looking at growing very fast on the loans at this stage. They will grow, of course. They want to maintain that 18 to 20% market share on incremental lending. Having said that, the focus clearly is on granular deposits, because obviously that's the need of the hour. LDR is out of control at this point in time. Incremental LDR they have to maintain at a reasonable number. They have to also ensure that the high-cost deposits are taken off their balance sheet, and thereby, according to the management, when you take out the, as you start repaying these high-cost deposits, you start seeing profitability come back into the balance sheet, because obviously the cost metrics works in favor of the bank.
Correct, absolutely, Vishy. And that takes me to margins. Where do margins really lie? Now, he's suggested that margins ex HDFC Limited is roughly in the 4 to 4.4% band. Firstly, let's listen to what he had to say before we start and give more perspective on that.
Minus of the foreign body that has come in, which is the book from HDFC Limited, there was a certain band at which we were operating in. I think somewhere between 4 and 4.4 for a long period of time. If you look at it, minus of that, we continue to maintain similar kind of a thought process. Why? Because we know in periods of tight liquidity, in periods where the funding is scarce, the rates will move up. So we have the right balance of what we need to do in terms of risk-based pricing, and this is not something new. We've been doing it for a long period of time. And I'm sure Srini would have done it in his earnings call as to how many we let go as well. For the risk appetite that we are comfortable, I think the pricing is more or less right. Okay. So yes, it's going to be tight. We are constantly, the only element, assuming my expected, the risk appetite continues to be the same, or the expected credit loss is the same, the only thing that is changing in the risk-based pricing model is the cost of funds. So to that extent, you will see constantly our asset liability committee management constantly raising the threshold level so that we don't sort of go down the margin ladder. Incrementally, I think we're reasonably sanguine that we should manage that. As I said, we're not in the quantity game at all. We don't want to grow just for the sake of market share.
Again, the thoughts here, Vishy, seem to be quite interesting. If he's going to replace his current liability base with deposits, margins should go up regardless of where loan growth lies, and which should impact EPS.
Correct. Yes, it's true that once you start replacing your high-cost borrowings with lower-cost deposits, then margins should improve in general. Having said that, he made one more point. He does not want to grow for the sake of growing.
Correct.
Right? Again, comes back to the point that loan growth is not the primary driving factor for the earnings trajectory that he's setting. He's saying that we will ensure, because there is a transition period. So he's very clearly guiding the market. There's a transition period. In this period, we will fix the cost problem. We'll fix the liabilities issue. then we'll focus on the loan growth part.
But no timelines given, Vishy.
No
That's
timelines at all.
one concern that continues to at least, mar me in terms of, I'm a bit of a skeptic on that particular count. No
Yeah.
timeline given. Also, Vishy, very quickly, will this allay investor fears?
So his ask of the investors is that you should remain patient, look at Q3 as a sort of an anomaly. Q4 onward, you're going to start seeing better numbers. But the problem that you raise, which is timelines, for a high execution top bank management, lack of timeline is an issue, and maybe the investors will take it differently. Maybe they will look at it from a point of view of, oh, at least now he's sobering the narrative, so it may be better off. I would like to see some amount of detail in terms of when exactly this transition period ends and when does the growth period for the bank starts.
Absolutely, Vishy. So one is timelines. The other one is with regard to just the fact that there was, how can a bank as large as HDFC Bank not have visibility on tight liquidity situations, which arose in October to December, which is what he continues to allude to. But of course, we need to wait and watch how markets respond to this. Investors are, of course, and markets are the ultimate barometer to decide what this commentary really means and how they assess it. But, that's all we have on the editor's card. Thank you so much, Vishy, for breaking that down for us.